Hello everyone, and welcome back to this edition of the Think Tank. It is Sunday, December 3rd, 2017, and I want to do an update about some of the stocks that I talked about, and they just have done so well. And I want to talk about the three companies that I spoke about in the past few months: Walmart, Verizon, and especially Qualcomm. Now, these stocks, after I talked about them and the reasons why I thought they were going to do well, they just took off. I mean, big time. And I mentioned this, it's very important. There are going to be people that recommend and talk about companies that they think are going to go up, but they're high-flying stocks. That's very risky. Because if you notice, these gurus, as they call themselves, people you see on TV, yeah, they recommend a lot of stocks, but some of them do terrible. And then they keep recommending stuff and keep recommending stuff. I mean, they can do it. Maybe they have a big portfolio, they have a lot of money to invest, but do they talk about the losers, right? And the risks? The stocks I recommended are mega cap. They're bellwethers, they're safe, they're aristocrats with their dividends, and usually stocks like this are just slow, they don't move much, right? And that's why investors that are looking for some risk and some growth shy away from them. But if you can find a specific time, right, where you think there's an area where the stock could really move, right, then you could do it in a safe manner, and I emphasize safe. Because the stocks that I just spoke about, have a history. They pay good dividends. They have good earnings. They have a low PE ratio, a low PS ratio. And they're going down for reasons which are just bad news coming out. Bad PR or worries about the future. It's kind of interesting because stocks get hyped up and they go up because of prospective earnings. And meanwhile, they don't look at the current earnings, which are not nearly as good and as rosy as a picture of where they might think they're going in the future. And I don't like to look at things that way. So I mentioned these stocks. And people are like, well, these are big companies. I mean, yeah, anybody can buy a very large, safe company. And over the long run, yeah, it's probably going to continue to go up. But then again, it might not. It could be flat. It can go down. Even the big, very big companies can have a lot of trouble and they can go down substantially, like Qualcomm. But I picked this stock at around the 53 level to go up, and the stock rocketed in less than a month's time to $69. Now, I'm out of this stock. It's been a great investment, so you might want to think about taking profits in this range. Also, Walmart, I did a vlog, which a lot of people watched. It was an interesting conversation about what happened a few months ago when Amazon made that very popular purchase, Whole Foods. It was all over the news, and it was really negative for Walmart. The stock went down like around 7%, and I talked about it. And I'm saying this is a great buying opportunity, and look what happened. Walmart, just a few months later, look at it now, it hit $100 a share. So it's really been a big move, and just as predicted, it just did very, very well. So I'm out of Walmart. I took profits there as well. It's been a great investment. And Verizon, and I talked about investing in Verizon at around $43, and it hit $50 a share in a very short period of time. And then it retracted, now it's going back up again, and I took profits there as well. So these three stocks have been great investments. I mean, for such big companies to move so quickly, and they're much safer than their smaller, high-flying counterparts, which, if they would go up, would move in a similar manner. Just been a great, great investment. Now, I want to also talk about something else. I did speak about being a defensive investor, which is important. This is going back several years. I talked about a couple of securities that I was looking at. I was looking at precious metals, I was looking at silver, and I was looking at a company called Chemical Corporation. Now, I put a link in the video description. You can take a look at this. Chemical Corporation at the time was trading at around $23, and the stock was really getting hit hard because especially what was happening. You could talk about fundamentals, what happened in Japan in 2011 with the nuclear incident that they had, and they stopped using nuclear technology. So it was really bad for the stock, even though they had long-term contracts to buy uranium, it's really bad for a company where you're seeing one of your biggest consumers shutting down their reactors. So the stock really got hammered. And it started to stabilize and come back up again, but I said don't buy it yet. First of all, it's risky because of the fact it's a specialized company. It's just uranium. They don't do anything else. That's it. So it's not diversified, which is a risky play. And I said, let's see some more strength. It was forming a very strong base, which looked like a cup and handle, right? Now, you have to buy it above the handle. And I said, you wait. It never did. It pulled back, it failed, and then it just got crushed. And the stock went down to around the $7 range recently. It started to come back a bit. Now, why do I mention this? This particular stock, I didn't get in. It was defensive, and that's very important. You know what Ben Franklin said? A penny saved is a penny earned. If you would have gotten in here, it would have been horrible. You would have lost a lot of money. And this stock was really getting hyped. A lot of people said, oh, it's going to come back. Japan will turn their nuclear reactors back on. Well, there's one thing they didn't talk about, and that was the energy meltdown. The whole energy sector got smashed. Oil prices got crushed, and that was not going to help a uranium miner, because uranium is about energy. So the whole energy sector was getting annihilated. So that's the thing, despite all the fundamentals, and they're saying it's good, and people are buying it, and there's institutional investors going in. So being a defensive investor could be even more important than being an offensive investor. Now, I also talked about silver, and that was a pretty much spot-on investment because, I said it was going to bottom out just about where it is now. It did fall harder, but it's stabilizing, coming up, and, right now I wouldn't recommend getting into precious metals. I would say stay out of it, but if you did get in, when I spoke about it, basically it's a pretty safe investment. I don't think it's going to go down much more than where it is right now. I'm not going to get too much into it. The problem, of course, with precious metals is if you invest directly in them, such as an ETF, there is no dividends. So, that's a problem unless you're investing in mining stocks, and I haven't really looked at those. So it's just been amazing. Really good money was made here, and I keep telling you, subscribe to this channel. I have more predictions coming up, 100% accuracy on these trades. They've moved really fast in a safe manner. So just wanted to give you an update of where I am in these stocks. I am looking at another stock right now, not recommending it just yet. And it's in the semiconductor industry. And I want to talk about this more because of the fact that what's going on with cryptocurrencies. Cryptocurrencies are going through the roof. And it's just been amazing what's been going on with Bitcoin and other cryptocurrencies. And I think that cryptocurrencies do have a place as a medium of exchange and money. And I'm not one of these guys that are predicting any collapses in major currencies around the world, but there's something called competing currencies, which has been spoken about by a lot of people, and I think Bitcoin and cryptocurrencies can be a competing currency. I think the blockchain technology is very important, and I think that it's amazing how something that's decentralized can work so harmoniously. My whole point is that if you look at the gold rush in the 1840s, who were the people that made money? It was the people selling the shovels, renting out the hotels, the restaurants. And I think what people should look at are companies that are creating the equipment that people need to mine cryptocurrencies. That's very important. People don't think about that. There's problems with Bitcoin because of the fees and that it's too slow, and they're going to think about something, and there's competing markets against it, and will it be banned? And the reality is the people that hold the key is the technology, because these graphics cards and chips have to be made. And the people that mine don't make them. They have to buy them. They depend on companies that make them. That's very powerful. And if you're bullish on cryptocurrencies, if you want to invest in a more safe manner, you have to look at technology companies that make the equipment. I'm giving you some really important things to look at. I want you to study that and think about that. Now, I'm looking at some companies right now, but I don't see a place to enter. A lot of them have been on fire, and partially as a result of what the cryptocurrencies have done. So I'm going to be talking more about this. Just subscribe to this channel. There's going to be more content coming here, and I just don't want to feel like I'm preaching to a choir. Basically, I've been right. So if you want to see more content like this, if you want to see what's coming up next, make sure to subscribe to this channel. I would like to thank you for watching. Please feel free to leave some comments and tell you what you think. Please like up this video, and thank you for tuning in.